Andrew Su, he's CEO of Compass Global Markets there in Sydney. Andrew, thanks a lot for joining us. Okay, we got a downgrade today. Was it A, a surprise for you? B, what does it mean overall?
No, it wasn't a surprise for me. Look, we've got serious issues in Italy. We've got debt running at over 100% of GDP. We've got a Prime Minister that faces 4 criminal trials, various corruption probes. We've got an austerity package that was passed in the last month that met with protests across Italy. 1,000 mayors of various cities and towns met in Milan to protest over the austerity package. It wasn't a surprise. What it will mean is that there is increasing pressure, obviously, on the euro and the various governments involved to come up with effective policy to meet the demands of the crisis. But unfortunately, I think that the situation is so dire that we might see further falls in the euro.
Does it mean, from a currency perspective, that people look for these havens now, they get out of the euro and they start piling into, let's say, the Aussie dollar or indeed even the US dollar and other Asian currencies?
Absolutely. I think that they'll be looking to pile into the US dollar and Asian currencies, not necessarily the Australian dollar. I think the Australian dollar is far too exposed to growth in China and commodity prices that are then again exposed to the slowing down of the economic growth. We think that the Australian dollar will actually fall in this environment. I think the big winner will be the US dollar.
Right. And does the recent strength surprise you, or do you think it's a long time coming?
I think it's a long time coming. I think the market has been expecting a turnaround, and I think it will continue. I think the situation in Europe is such that we've got too much policy ineffectiveness. We've got a population that is becoming increasingly tired of having to support various countries, especially the population in Germany and France. We've seen elections over the weekend in Germany where Chancellor Merkel's Christian Democrats essentially lost their seats. And I think that overall what we're seeing is that there is increasing popular dissatisfaction with the way that the governments are handling the situation, and that'll mean further weakness for the euro.
Andrew, talk to me about, well, really what happens here as well with the FOMC meeting. Do we get another round of bond purchasing? I mean, or is QE3 really the idea of it dead because, well, QE2 didn't work?
I think that the FOMC will be thinking very hard about what to do next. I don't think there will be any major policy announcements in the next few months. They are looking for things to settle down. They are looking for further developments out of Europe. The last thing they want to do is come up with some policy that is half-baked and then is met with very bad reception by international investors, which can only cause further precipitation of potentially a global financial crisis. So they will take their time. I don't think we will see any major policy announcements in the next month or so.
Right, let's talk a bit about the yen as well. It's stubbornly on that 76 yen level against its American counterpart. Even talk of intervention now doesn't make it move anywhere. And in fact, I think the Bank of Japan has probably given up trying to intervene because it doesn't seem to work there either. So what do they do next? Is there a concern? And do you see in the longer term or medium term the yen does actually depreciate?
I don't think the yen will depreciate. I don't think there's much that the Bank of Japan will do. There is, however, increasing pressure from obviously the corporations like Toyota and Sony on the new government to intervene, largely because it affects their competitiveness internationally. We will see various bouts of intervention throughout the next few months, without a doubt, as dollar yen approaches 75. But I don't see that this will have any effect on the strength of the yen. This is based on historical evidence. The previous intervention occurred in early August. Over almost $60 billion was spent to buy dollars against the yen, and the result has been that dollar yen is exactly where it was previously, and unfortunately I think that the only way is down for dollar yen.
Just want a very, in 10 seconds, Andrew, just give me your favourite trade.
Favourite trade, sell Aussie dollars here, looking for a breach of parity within the next 2 weeks.
Andrew, thank you very much indeed for that. Andrew Su there joining us from Sydney.